Hey, what's going on YouTube? Kenny here. So today we're feeling quite vindicated right now. When we talked about Baba all those months ago, 7, 8 months ago, we said that, hey, there's some serious China risk here. Once the Eye of Sauron or the Eye of Emperor Shi gets on a company or a bunch of companies, there may be some changes. In fact, there are some stocks selling off, peeling back pretty rapidly here. Baba is now at 190, definitely going towards our 170 price target. Did it sound batshit crazy a couple months ago? Yes, absolutely. But is it maybe going to happen? Yes, maybe. Who knows? Will we buy it at that level? Probably. It's just too good of a deal. Baba is a great company, and the fundamentals, if you're a value investor, look pretty amazing. So if you didn't know, Baba is kind of an amalgamation or kind of half and half, halvesies, tech company, and then you're kind of like Amazon variant, but I mean like the Amazon piece of it, the actual fundamental piece of it, the numbers are really good all the way around. So a half growth, half value stock is all I'm saying. Like in terms of valuation, if you think it's a growth stock, it's very, very undervalued. If you think it's a value stock, then it's still pretty decent, which is crazy because it's sold off a lot. PE multiples down, down, down. So if you're new here, Redcliffe Research is a data-heavy research company that deals a lot with signal detection. We use a lot of ML and AI and just try to find signal in the noise for our clients. That said, today we're going to talk about Baba, we're going to talk about DIDI, and we're talking about NIO. So Tommy, our political risk advisor, strategic advisor, if you will, gave him a cool title. He doesn't deserve it, but anyways, he gave me the cliff notes, and I did a couple. I did some reading myself, so we're just going to go into it and kind of tell you what I think about this whole trade as it sets up and what maybe might be in store for Baba. Also, if you're new here, we do everything in one take, so if I'm kind of like thinking, that's literally because I'm thinking or I'm getting a drink of wine. So let's go ahead and just get into it. So let's talk about great power competition. If you've been living in Iraq, essentially, great power competition is the idea that there's a bunch of great powers right now, and they're vying for resources. We'll never probably see war on the scale or in the way that we used to fight it. But now everything is just in that gray warfare zone where everything is short of war. But still, make no mistake, people are fighting and competing. And so maybe war is not the right thing or the right verbiage, but there's definitely a power competition going on here. In terms of near-peer actors, near-peer threats, China is definitely numero uno, number one. So I want to talk about DIDI real quick. So DIDI is that ride-sharing app that everybody talked about. It's a very large app, very large indeed. Apparently, it's so large that they didn't even want to shut it down completely, because had they shut it down completely, then a bunch of folks would be late for work, et cetera, et cetera. The idea here is this thing is all about data security and data sovereignty. And, while this might sound, I guess, autocratic, there was a council formed. Okay, that might not be... Okay, don't worry about that. Even though it sounds very autocratic, it's not very far from what we've done as well. We'll kind of talk about that in a second. So the idea here is the reason why there was so much scrutiny on DIDI is because it was road and mapping information, which is obviously sensitive data, especially for the folks at the CCP here. Anyways, overseas data could be leaked is what their whole kind of bottom line up front was. So the thing that you need to know was DIDI was warned, and they did not, however, postpone the IPO. But the warning was kind of informal. There's no informal checks, and there's no it's just informal checks, rather. And there was no formal process from what we're gathering on our side here. So right now, again, people cannot download the app, so no new users. But again, it's still tech that they want folks to be using because it's so big and it would disrupt so much. Equivalent of just shutting down Uber, like what's going to happen, right? Excuse me. Okay, so, like we talked about data sovereignty and all that other stuff, data security is the better word for that. So this is setting up to be what I would call a reverse TikTok scenario. And I'm not the only one. A lot of smart people are thinking that too. But, as U.S. Was scared of the whole data snooping from China, this is indeed the same thing. Like in the Chinese media, if you take a look at it, they're saying the same thing. In fact, there's some Chinese media that say, "Hey, look, the U.S. they got it right with TikTok, right? They should be scrutinizing our stuff, right? And so we must protect our data as well." It's kind of like the theme. So really, there's not there is a definite kind of respect and understanding of what data can do and how powerful it is in the Chinese kind of the government. So could this be a power play? When I first heard about it and heard about the tech crackdowns and all that other stuff, I really thought to myself, like, hey, this is getting pretty serious. I think this is going to really it's going to do what I thought it would do to the stock price and to some of the other things that are happening here with some of the Chinese stocks. But then I thought to myself, the more and more I see, I don't know, your Jim Cramers come on and say, hey, you can't buy Chinese stocks and all that other stuff. Now's the time to be contrarian. So why am I saying that? It's time to be contrarian because if it gets any lower, it dips any more, then I'm probably going to be buying the dip. Obviously, do your own due diligence. But if you think about the way that you should be looking at this, like some of the smartest folks in the space, in the Chinese kind of space right now, thinking the same thing. Like think about it, right? Like the equity raise mechanism is very essential for business and capitalism. If in fact you completely castrate the equity raise mechanism, then companies will not be competing with the U.S. companies. Like your Babas are always going to play. Your Alibabas will always play in Tencent, and all these other companies will always play second fiddle. And in fact, there's no kind of suggestion that these companies, other than very specific ones right now, are being targeted, of course. And so we said Baba because of Jack Ma and kind of that whole ecosystem, trying to deconstruct that social network, right? Trying to figure out who he's connected to, who hates him, right? But he's definitely tangential to Alibaba. And so we know with the Eye of Sauron or Emperor Xi's Iron Fist definitely had some scrutiny on him. But that said, Alibaba obviously ingests a lot of data, a lot of consumer private data. So that's kind of why Baba is kind of under the Eye of Sauron. So what does that mean for things like NIO? Probably nothing. And that's why we talked about it in the general chat today. Roberto actually asked, hey, Kenny, what do you think about the political risk of NIO? And I'm saying, if my thesis holds, NIO should be absolutely fine. Did it sell off a little bit? Yeah, probably because, everybody's trying to run into earnings when it comes to Tesla and all this other stuff. But honestly, in terms of this specific risk, probably not so much. So let's go ahead and get back into this. We're going to go ahead and do a scoring for Baba. So this is what it's going to look like. We're going to go through all these like fundamental and technical kind of features. So we're going to take a look at three charts, good, bad, and worse. So DIDI, NIO, and Baba. So DIDI first, okay, started IPO at 1802. Lost more than half, more than 75%, it looks like at this point, sitting at $7.19 at the low, right now at $8.03. Nothing to really chart, no pattern here, but, in terms of entries, the thing is, we just don't know where the floor is or where the floor could be. And in fact, again, the app itself is suspended, so there's no money or revenues right now. So indeed, this should actually be justifiably a good maybe put scenario right here. We have no idea how fast or how quickly this could recover. If anything, I'm still short biased on DIDI. Okay, so Alibaba. We talked about this so many times ago. We talked about the fines. Getting down to just the fine level was $212 post fine as the kind of valuation for it. And right now it's sitting at 190. We called for 170 only because of the technicals support that, right? And really, it's going to be hard to see this, but if it does see this, this is catastrophic failure, if you ask me. And really, it's just the price matching the technicals. And, if indeed, if you read a bunch of white papers on stock price, stock performance, look at some of the academic research. If indeed you take the model where you're saying, okay, I discount everything and just go technical analysis, then, the idea that this pressure here is pressuring it down would suggest that 170 is the place for it to bounce, right? But anyways, all the moving averages on top pushing down really hard right now. So definitely can't catch that falling knife. It tried so many times here to kind of move up, and it's been unsuccessful. You can only assume that it might do it a couple more times before you get a heavy bounce. And the thing is, you'll know when it bounces real hard. But, if you want to try to get that perfect entry, first tranche here at 170. But honestly, at this point, you should be thinking about it right now for sure and getting really greedy at 170. And so, even as long as you don't have too much China exposure, I think BABA, here is pretty amazing. We'll go over the kind of the technicals and the fundamentals real quick too, and put our new scoring system rubric on it just to see. Okay, so NIO. The reason why I'm talking about NIO, again, I don't think the risk is there. It's a car. There's going to be some kind of data. There's going to be some road mapping, of course. But the second part would be, for me, is I don't think that China can afford to get behind in the vehicle game. So if you look at all these companies like Hyundai and Toyota and all these other car manufacturers that export, obviously all the European car companies as well, China has never had that piece. And if they want a piece or a stake in modernity, I mean, you gotta get in the car game, man. That's like rule number one, especially now that everything's autonomous. Your technology has got to be top notch, or else you stand the risk of just never modernizing or being like that true number one hitter in the world stage. So that's definitely what they need to be looking at. And so I think the EV market is going to be very. And you see that with all the tax credits, with all the kind of like helping hands that they've been giving NIO. They've been, helping them with legislation. They've been helping them with, indeed, a government factory, really, that's helping them along. So for all those reasons, I still think this is a decent play right now, at least for the short term. Short to mid-term, don't know what it's going to do next year. It really just depends. This is really a defining moment for how bad this second wave is going to be and how long it lasts. And if we see a retracement, point is, I think 31 is a very acceptable floor here. And if you're wondering why this technical analysis is pretty kind of just basic, the technical analysis we use is just really based on some of the backtesting we've done. Horizontal channels, sideways price action is generally the most honest price action for us from how we do this. And then the second piece is, we use a lot of ML and AI to find other signals, so we don't have a ton of indicators on this. And the third piece to this is when it comes to timing, we will use the DeMark indicator, which is not showing much here, so we're going to go ahead and just peel off. But anyways, we have the convergence of all these moving averages, and it should, in fact, bounce. If it bounces hard here, that's definitely a trend, and it's keeping to the 200. If it fails here, we're definitely going to see 31, is all I'll say. So we are in kind of no man's land, but we have some risk-on trades, if you will, some YOLO trades for the next couple weeks here. So just looking at that, just kind of wanted to let everybody know kind of how we're looking at it, how we're setting this trade up. Okay, so let's go into Alibaba. So this is the tip rank score. We use this as kind of a smoothing score, meaning we aggregate this into our data to try to, make sure that we're not too far contrarian, too far anomalous in terms of what the smart analysts are saying and what kind of the consensus is. So here it's showing 9, which is outperform, which is an amazing score for tip ranks. No insider activity, and hedge fund activity is actually very increased, which is really compelling for me. The only thing that's really doing bad is the actual SMA, but I mean, the return on equity is all positive in terms of what the tip ranks analysts are saying and the analysts are saying. Buy, except for Kramer. Excuse me. Okay, so in terms of the analyst price target, look at it, we're sitting at 51.66% upside. So strong buy, $290 price target. Again, we're at 190 right now, almost a 51.66% upside. Put a recency bias on it. The newest thing here, though, is Colin Sebastian, which is a 5-star rating. He still has a price target of 270. He's saying buy here, don't hold, 40% upside. So, I mean, definitely a bunch of hitters here, a bunch of analysts, and obviously there's a lot of folks doing fundamental analysis on Baba. So, I mean, not trying to compete on that, really just thinking about the political risk and thinking through, for us, how does this trade set up? Because I'm not trying to hold Baba for years. It's not my play, but I definitely wouldn't mind taking it for a 6-month swing trade here if I think it can kind of recover in 6 months to a year. So in terms of Baba, this is a partnership we have with Centrella, my other company, which is a data analytics firm, basically showing 4 bullish indicators, 65% confidence, and then 5 at 60% confidence. What's that mean? Absolutely nothing. It's not statistically significant. I'm just showing you that just to show you that, there's no emerging kind of patterns, and there's also no emerging signals for us. This is just a sentiment heat map, not showing too much. I was really wondering if there was going to be anything over here to the left. Again, this is not any kind of NLP or anything like that. This is just standard, just text detection dictionary words. But still, some folks are probably pretty happy that it's selling off so they can buy more, right? So this is money sign Baba, if you're wondering what I use for search. This is interesting because there's actually a subreddit now called Baba, and it started with 0 on July the 21st, just a couple days ago, and now 6 days later, you're at 60 subscribers. Some of the articles they're talking about is basically, as someone who's 100% Baba and leveraged to the TITS in options, I just whatever, crazy. 400K Baba YOLO. So this is getting pretty serious. I don't disagree. The idea here is, like, if you look at these articles at this price, at 212 and with all that pressure and all that, like it wasn't as interesting for me. But now it's kind of fall through the floor and gap down. If it hits 170, I'm very interested. In fact, even at 190, if we can get down to 185 or peel into the 180s, I'm going to buy a tranche there. And so, if you're new to this channel, I'm not just going to go through everything, but, we do buy in tranches. So the second tranche definitely will be 170, load the boat. And then from there, whatever. See you later. But 180s, I definitely will buy a tranche, heavy leveraged options. Looking for some serious YOLO, something like this guy, 400K Baba YOLO, maybe not 400K. Take a couple zeros out. Okay. Anyways, just looking at the discounted cash flow with the typical Gordon growth exit model here, with the discount rate set at a reasonable discount rate without the kind of political risk assumed, I think really is what we're trying to say here. Fair value 265, really close to the analyst price targets. But we did another one. I went in and chopped up the discount rates, added a lot more risk. As you can see, a lot more risk. And some of you guys are like, that's bonkers. That's way too much risk, Kenny. Well, that's how much I'm equating it for. That's my cost of capital. So you got to get me some good returns here, or else I don't want to play. So 195, 89 for fair market value. So even with my super bearish take, I still should be buying here. Well, I should think about buying. What's my point? This is why you do discount models. This is why you do your own kind of due diligence. This is why you do your own research. This is why you do your own kind of scoring. This scoring for me is getting very close to being interesting. And so we're kind of foot stomping here. You want to buy when people are scared, boys and girls. You want to buy. If the fear doesn't justify or doesn't warrant, it is getting really close to a point where the fear is not warranted anymore. Because again, I don't see China scuttling their entire industry, or their entire tech industry rather, and playing second fiddle to the U.S. in tech. They have big aspirations. They'll figure it out. They'll definitely put as much pressure as they can, but there will be a time where they let them flourish again. And guess what? They'll be making tons of money, and you'll see them reap the rewards. And in fact, I do think the FANG names are going to be under pressure in terms of, our peoples over here. I think that there's definitely bipartisan support right now, and I'm going to have Tommy take a look in that. But these tech names are going to be under a lot of pressure, I think, soon in the U.S. is what I'm saying. Okay, so in terms of PE, we're down to 22.7x. You're almost down to the point where, like, even if it's a full-on value stock, almost a buy. That is insane. And you know that this has a lot of tech, a lot of growth. They do a lot of things when it comes to cloud compute and all that other stuff. So, and they always have the Ant Pay and the fintech pieces too. So, I mean, this is amazing. Like, you're never going to see this again, probably. I mean, if there's any more splash on the downside, you're probably going to want to get in. Revenues going up, that's a check mark. CAGR, 48%, solid. Levered free cash flow on the way up, that's just amazing. Gross profit margin, kind of sideways, but this is because of the acquirers that didn't go through, but I'm going to still give it a check mark. I feel like this is still amazing for growth / value stock. I mean, this is in growth territory for sure still. Gross profit, absolutely great, going up. Shares outstanding, a little dilution here, but I mean, there's nothing alarming that's triggering. Sometimes you have to raise some kind of equity. It looks like some equity raise is happening. Total assets, definitely on the up against current liabilities. So you could pay off all this liabilities, right? Look at this, 258 billion against 57 billion. So you'd still have 200 billion left. We love to see that. You could pay everything off, no problem. So that's like a 1-to-5 ratio, right? So check and check. This is, you get the star, you get the money dance. Unfortunately, I don't have the money dance up, or else you would get the money dance here for sure. In terms of financial health, this is just looking against its peers, and if you can see the profit health A, the relative value looking at C. That's just because the sector is pretty hot, but yeah, no, I mean, in terms of the name that Baba is very interesting. So looking at the scoring, the first scoring, smoothing. Again, what do other people think? We give it a 9 out of 10. So average is 5, just so you don't get this kind of mixed up. So at 50% is passing grade. It'd be like a 70, right? So this is passing. I probably should average this out so you can get that American system going so people don't get all splashed out here. But no, 50 is average, so 9 is incredibly amazing. And again, everything we do here, we're looking for 2 sigma signals, 95% or better. So in order for us to blindly buy based on this kind of qualitative assessment, we would want to see a 9. And you're saying, Kenny, 9 is not 95%. You want to see 95. Well, after backtesting this kind of formula, we've made it hard enough to get to 90. So 90 isn't like a blindfolded buy. Because essentially you have so many 10s in here that it's statistically significant. Consensus and risk to reward, looking at a full-on 10, 50% upside for a staple name. This is like getting Walmart on sale. Okay, so macro qualitative, not looking good, but it's really interesting. This could have went either way. I think I could have given this thing a 6 or 2, which is weird, I know. So I split the difference, gave it a 4. The reason why is because macro-wise, I do think it's overbagged, but I'm not positive. So I have to leave the risk there, and it's just not quite down to the price where I think you can just blindly buy. So leaving it at a 4 definitely will increase as the price goes down. If it hits 170, this thing turns into a snap 8, right? At least. Fundamentals, looking at a 10, obviously we showed you that. There's no disputing that for sure. The entry is a 9. We're a really good spot, especially for you long-term investors. If you're a swing trader, this falling knife, you want to check the DeMark indicator, which we'll do on some other day. But yeah, you definitely want to check that out. Technicals, looking at a 4, just because there's that 170 that really looks like it just might gap down, and we're seeing a lot of weakness here. So maybe another month or two, who knows? Or maybe this week we can get there. We've got earnings coming up as well. So the AI engine showing a 5. This is a completely average. Again, no signal at all. And then sentiment showing a 5. I probably could have went 6 there with the new Reddit buzz, but with only 96 subscribers, not really that interesting. Volumetrically against the Twitterverse, not really sizable. So, for all those things, and so if you're new here, kind of the things that we do in terms of sentiment, we've been trying to crack that nut for some time now. But what we look at is quality and quantity, right? So making sure that there's no bot behavior and all that kind of stuff, but save that for another time. So final score is actually 64, even lower than the banks. So does that mean that this score is right? Um, you got to trust your scoring. There must have been something here. And again, this is qualitative. I know this is quant. It looks like quant, right? But it's all qualitative. The only thing here is that's quant is probably this AI score. And then maybe some of these smoothing scores, right? And this maybe the fundamental score. But other than that, this is all qualitative. So there's like a lot of bias here. Just realize that. So my point is, can I sleep? This is the can you sleep at night score. And for me, you know, I can buy a 60 for sure. I can even YOLO a 60, but I'm not going to fall in love with a 60, if he hits 90, instant buy, blindfolded. AMD hit 86 or whatever the other day. So, I mean, pretty fucking close. My point is there's something in here, something about it. It's just not sitting right. And I made a really bullish case. So just remember that I made a very bullish case for this, but something still doesn't sit right. That said, my plan is I've justified it enough to buy at least a tranche here. What is a tranche? A tranche for us is 1 month's ad or 1 month's kind of investment. So, if you add money to your investment portfolio once a month, then whatever that is, that's one tranche for us. And I am definitely deploying a tranche against Baba. So yeah, that was the entire video. Hope you liked it. It was pretty long, but I think it had a lot of points that I wanted to make and clarify, especially for the subscribers and the folks who are kind of just following us, just stalking us. Anyways, if you like this kind of thing, we do have a macro newsletter. It's free. It's going to go out pretty soon here, July 26th. Damn it, got to make it pretty soon. Also, yeah, thanks for watching. If you made it this far to the end and you're new here, let me know. That'd be really cool. I'm not going to ask you to do anything, but check out our live stream. That's tomorrow. See you on the live stream tomorrow, Tuesday. Thanks for watching, and we'll see you tomorrow. Bye.